Welcome back to the Hair Curler Chronicles. In today's episode, we're going to talk about the difference between a balance sheet and a profit and loss statement. We're going back to basics. So the difference between assets versus liabilities, income versus expenses. So let's jump right on in.
Good morning, everybody. It's Tim and Nancy Danter typically from the Hair Curler Chronicles, but without the hair curlers today. We were so really excited and blessed by all the new people watching some of our videos and reading through all of the comments, both on our channel and also on High Rise channel. I've tried to read through everything that everybody's saying, and it was a lot of comments. And it's such an amazing community of people that are just like you and just like us, just like you and me, where we're just trying to figure it out. So to be really transparent and honest with everybody, I would say that Tim and I, for a lot of years, were on autopilot. What that means is that, we took care of our retirement savings by my money came off my paycheck and went right into my Manulife account, and we bought mutual funds, and it just took care of itself, and we didn't think about it. We were too busy. I don't know if any of you can relate to being too busy. We had 2 kids running around, hockey practice, different sporting events going on. He running his own business. I was climbing the corporate ladder, and we were just too busy. I would drive to work in the car every morning, and I'd hear things on the radio about the stock market up, the stock market down. You'd hear about this company, that company, but would never in a million years think to invest in individual stocks. It was too confusing. And part of what was confusing about it was not that we weren't getting stock tips and stuff, because like everybody, you get stock tips. What was confusing about it, for me anyways, was that being an entrepreneur and a business person, every decision we ever made was based on sound money principles. And what does that mean? Because you've heard that term before. I need to understand the cash flow of the business. I need to understand their profit and loss statement. I need to understand what's on their balance sheet. So to be buying and selling stocks when I didn't understand what that looked like was a challenge for me. So I just took the easy road and just threw it over there with the mutual fund and didn't think about it. And then we started down the path of cryptocurrency. And cryptocurrency made sense to me from a sound money principle. And we're going to talk about that in a future video, why that is. But what I thought we would do today, or what Tim and I thought we would do today, more me than him, is we talk to you a little bit about when you start to go down this journey in the YouTube universe, you're going to start hearing terms. And I thought maybe we would just very simplistically, the dog is down below here and is jiggling the camera in case you're wondering what's going on. It's kind of funny. He's smelling the camera. Anyways, what we thought we would do is try to, in a very simplistic manner, talk about your cash flow, like a cash flow quadrant, and what a profit and loss and how it relates back to your balance sheet. And the interesting thing is that this applies not just to business, this applies to households, and it applies to individuals.
This is where we used to have the glazed eyed look, like you're probably getting at this time in the video. It's like, oh my God, we're gonna go, and they're gonna start talking French or gibberish about stuff. And it's like, I know. Hang in there, folks. This is simple, hopefully relatable terms. Nance.
Okay, so in the very simplest terms, and I'm gonna read it and then we'll talk about it. In the simplest form, your balance sheet can be divided into 2 categories. This is your assets and your liabilities. Assets are the items the company owns that can provide future economic benefits. Liabilities are what you owe to other parties. In short, assets put money in your pocket and liabilities take money out of your pocket. So when you're looking at yourself personally, from a personal standpoint of view, get a piece of paper out, or like Tim and I do, the Purple Book of Ideas, just draw a line on a page and title it assets on one side, liabilities on the other side. And so when you look at, for us personally, we have a condo that we rent out. That's an asset. Our liability would be the mortgage we owe on that condo. Then we've got this cottage asset. On the liability side point of view, the mortgage we owe on this asset. But this goes down to everything. If you own your car or a truck or a motorcycle and you own it, not lease it, that goes on your asset side. In Ryan's video, he talked about he's owned silver. Silver is an asset, so it goes under his asset. If he owed any money on it, it would go in the liability column. So when you're looking at your family or your personal situation, you really want to have a good idea of what you own versus what you owe. That's step one. Now, step two is to understand profit and loss. And what that is, again, another page in Purple Book of Ideas, profit and loss, or income versus expenses. Draw the line in the page, income versus your expenses. So in our case, income is what we would get from doing our 9-to-5 job. There's our income. Our expenses.
Well, hang on. You're talking about income gross or net?
Oh God, we're just simplifying it now. Why did you say those things?
There goes the train.
Don't do that. This is really simplified so that you can go either as a single person or as a family unit, go and be able to fill out these columns so you can get a quick snapshot at what you're looking at. So then you're going, okay, what income have I got coming in? So in our particular case, we'll just talk about us. We have the money from what I get from going to my 9-to-5 job. So there's my income. We have what he makes going and doing his driver rehabilitation. There's his income. Then in addition, because this is an income property for us, then everything we make on this goes in our income. Then we've got our condo in downtown. That's our income. That goes down our income column. If by some chance we can make some money more than just painting lamps and things like that, and we can put that in our income column. Then what you want to do is go down, and the expense column is where it gets trickier, because that'll take you a little bit longer, but that is everything it takes for you to live, every single thing. And so you just fill that all in, and quite quickly you will start to see whether you've got enough money, cash flow coming in versus your expenses going out. So when we talk about the financial diet, what we're doing is Tim's going down that expense column, straight down the expense column, and he's going, do we need this? Do we need this? Do we need this? Can we shave this off? Can we rejig how we can't obviously stop eating, but is there a way that we can simplify what we're doing, or maybe make our food budget stretch out? Nancy, do you need to get your hair done all the time? Yes, I do. But all of those things when we're looking at a financial diet. So when we're talking about this journey to building wealth, I would caution you to jump right in without doing this exercise first, because you don't want to jeopardize what you've got, what you're obligated to pay out just to be investing.
It took us a while to get the gumption to actually sit down and do the budget, because we knew we were up the creek and we had no paddle.
Yeah.
And if you learn about our story and our history, number one, we're middle-aged, and we're middle-aged, and these properties we have came much later in life, because as an entrepreneur who has a responsibility to employ people and pay the government and pay the taxes and stuff, they come first before our retirement comes first. So it took us a while to sit down and say, if we don't do something and look at what the income and outcome is of our financial status, we're going to be 65 and selling pencils on the corner.
Yeah, it sucks. It completely sucks. And I think for the most part, most of us know the golden rule is to spend less than you earn. Super hard to do, easy to say, super hard to do, especially when you're raising kids. And we had a house that we lived in, that we owned, that we had tons of expenses on. We got rid of that. We live in a rental, and we've bought rental properties. So what we've done is we've taken our household expenses and we shrunk it really, really small so that we could expand our way to make more income. It's a different way to think about it. And it took us years of doing everything incorrectly.
And it's discipline.
And it's discipline.
It's discipline.
It's awful. But you know what? Sitting here now, almost 3 years later, after we made the big decision to really look at this.
3 years ago.
What a difference it has made.
That we got all of this.
So yes.
All the income came in about like these rental properties and the condo and the cottage only happened 3 years ago. So.
And we've been married for 30 years. So it took us a long time of doing things completely wrong and getting ourselves into big holes that we took a long time to dig out of. But what the baseline of this video is all about is really, really, really and truly sit down, purple book of ideas, write down in one column, what are my assets? What are my liabilities? What do I owe people versus what do I actually own? And then how am I supporting those assets and how am I paying off those liabilities? And you do that through your income versus your expense statement. The best book we ever read about this was Rich Dad, Poor Dad's, which was written by Robert Kiyosaki. And we're going to put a link in this video about that. And it really helped us shape how we go about and do this for our business, which is our family. And so we hope that you found this video a little bit self-explanatory, and we are not experts. We're just sharing with you what we ended up doing to get ourselves right-sided.
We're just sharing our journey, and we're just sharing our experiences, and we're just sharing what we personally did to right side us, and a lot of it, it's like you've got to, at the top of the hill, when it's a snowy hill, make a little snowball, push it, and it just builds momentum. Well, that top of the hill to us was sitting down and putting on paper income, expenses, and getting that shock. Once the initial shock's over and you've waded into the water up to your knees, you're climatized to it. And then you can start to rationally get solutions and see what's real and what's not. And it comes down to, as I've said before in videos, want versus a need. It's going to come down to that, folks. And it's tough, and it's not as bad as you think, but it's definitely, and it's never too late to start. It's never too late. I don't, we're
middle-aged.
Yeah, all right. It doesn't matter how young you are, how old you are.
It's never too late.
It's never too late. Just start.
Yeah.
Just start.
And it'll give you such peace of mind. Yeah. We sleep so much better at night now that we've started to figure this out. And I just want to encourage you to stay tuned. In our future episodes, we're going to start talking about why cryptocurrency, how that factors into this journey, assets versus liability, profit loss statement. So stay tuned for that. Thanks so much. See you soon.